And I welcome the chance to speak on the issue of insurance reform, which is an important matter, and it's a timely discussion 2.5 years after the Government's launch its own action plan on insurance reform in December of 2020. And to begin with, I want to stress that although insurance often seems like a boring or a dry topic, it is in fact crucial to the functioning of a modern economy, because it allows business to transfer risk, and without which many would be unable to access funding and credit. It also allows for risk to be priced, allowing firms to allocate resources to reduce risk to the benefit of consumers. And when there is a weak availability in insurance cover, businesses and the wider economy suffer. The National Competitiveness Council has repeatedly warned that business costs such as insurance pose a risk to the competitiveness of our economy and the ability of businesses to thrive and to grow, and that risk remains. But insurance is also crucial for citizens. It protects them from financial loss should unexpected circumstances come to pass, such as illness, home damage, accidents on the road or elsewhere. Indeed, insurance cover is a legal requirement for anyone who wishes to drive here in the state, and that is why a properly functioning insurance market that provides affordable cover is so important. Now, many of us will be aware that the insurance market follows underwriting cycles, periods when cover is readily available at good prices or soft markets, and periods when cover is limited and prices are high or hard markets. And there is no doubt that the Irish insurance market follows these cycles like every other insurance market. But we now know that there is much more to price dynamics in the Irish insurance market than just this. The National Information Claims Database published by the Central Bank has offered valuable and granular data on price trends, on claims costs, on settlement channels, on profitability within the insurance sector, and the numbers are very clear. In the past decade, for example, the price of motor insurance rose by 25%, while the average cost of claims for every policy fell by 29%. For several years, the insurance industry told a different story, which I'll come to later. But motor insurance premiums remain too high, and we must see sustained reduction in prices over the coming years. Liability insurance for small businesses, for voluntary groups and for community organisations remain in a state of crisis. Today, the Central Bank published its second report on employer liability, public liability and commercial property insurance, and it provides important insights for us all. Between 2013 and 2020, premiums for the employer liability component of packages policies increased by 44%, while premiums for public liability component rose by 25%. Now, not every sector is affected equally. Since 2009, premiums in the arts, entertainment and recreation sector have more than doubled, a level of increase that many simply cannot bear. In the same period, the number of claims fell by more than 25%. So premiums are doubling, claims are coming down by 25%, while the number of claims in public liability side fell by 47%. Importantly, today's report highlights claim settlement channels and their costs. It found once again, as is done in recent reports, that settlements through the courts take longer, with much higher legal costs than those through PIAB. Where a claim is settled through PIAB, legal costs make up about 2% of the overall costs. Through the courts, legal costs take up a third of all costs. Settlements through the court may not always lead to better outcomes for claimants, but it's definitely a moneymaker for the legal industry, and that much is clear. So work must be done to explore reforms that would reduce legal costs and crucially strengthen the role of PIAB. Now, one of the biggest challenges, or one of the biggest changes to take place in the insurance in recent years has been the adoption of the Personal Injuries Guidelines back in April of last year. Now, these guidelines significantly reduced the level of awards for different types of personal injury, and they were adopted as a result of the Judicial Council Act, which was supported by my own party. Now, we supported these provisions for one reason, and one reason only, and that was that reduced claims through these new guidelines would lead to reduced premiums for consumers. Since the guidelines came into effect, personal injury awards through PIAB have fallen by 42%, and recent High Court decisions will ensure these guidelines are applied in the courts. What is clear is that these guidelines are reducing the cost of claims for insurers, What is also clear is that this has not been passed on euro for euro to the customers, and that is simply unacceptable. This Dáil did not pass the Judicial Councils Act to provide a windfall for insurers. So how can we ensure that insurers do the right thing? How can we ensure that they pass on these savings euro for euro to their customers? Well, we do that through supporting the Judicial Council Amendment Act that I introduced last year. This legislation would require insurers to send audited reports on an annual basis to the Central Bank. They would be required to outline how and if they have passed on these savings onto their customers in the forms of lower premiums. Now, similar legislation was applied in Britain, where many insurers in the Irish market also operate. For reasons I can't understand, even to this day, the Government are opposing this legislation, which is currently before the Finance Committee. Neither the Dáil nor the Central Bank have a tool like this. The National Claims Information Database does not provide the information that this legislation would provide for, which the Central Bank has confirmed. This legislation would exert pressure and increase transparency, ensuring that insurers pass on these savings to their customers. So we cannot allow the insurance industry to pocket these savings during a cost of living crisis where every euro matters to motorists, matters to small businesses, to community groups and those struggling with high business costs. The question of insurance pricing has been debated in this chamber and outside for some time. For the years, the industry peddled several myths to explain away high insurance prices. Now, many of those myths were regurgitated in this House by government spokespersons. One claim made by the industry was that 20% of insurance claims were fraudulent. Yet information that I received from the Department of Justice showed that the entire industry only reported 63 incidents of fraud in motor insurance sector to the Gardaí in 2019, which is 0.5% of claims made that year, and in 2020 only 48 incidents of fraud were reported. Now, we now know that one cause of high insurance prices is blatant price gouging by the industry. In 2019, I wrote to the Central Bank. I subsequently met with the Governor and requested that he and the Central Bank and the regulator investigate and ban the practice of dual pricing and price walking. And this is where insurance companies target loyal customers and charge them artificially high prices in the expectation that these customers will not shop around. This is price discrimination, known to harm vulnerable groups and the elderly. Customers have wondered year after year why, when they get the renewal quote, the price doesn't budge or even increases, despite them having made no claims in the previous year. We now know the answer: price gouging by the insurance industry. So following my request, the Central Bank have carried out a review of the practice, and it will be banned from next week, the 1st of July. And this is a big win for consumers, but we must monitor the new rules and ensure that they are effective. I have my own concerns regarding the ban kicking in for second renewals and not for the first renewal quote, as I believe that this could provide scope for insurers to dodge the ban by loading the price hike onto the first-year renewals. I have communicated these concerns to the Central Bank, and we must keep it under review. There are, of course, further reforms that are required. As I mentioned earlier, specifically with regards to business insurance, the issue of claims must be dealt with. In this space, there is a clear need to rebalance the duty of care. A government commitment was made in the action plan for insurance reform to have proposals brought before Cabinet by June of 21. The deadline was missed by several months, indicating a lack of urgency within this government. But I welcome the fact that there are now proposed changes. The government now must move quickly to bring legislation before the Oireachtas that is effective in rebalancing the duty of care. Finally, I want to mention just two other issues, and that is the Consumer Insurance Contracts Act, which I introduced in the Dáil in 2017, with all its provisions now effective since September of last year. This legislation brought a radical overhaul of insurance law, increased transparency and shifted the balance in favour of consumers. To conclude, I believe that many of the myths and excuses peddled by the insurance industry for many years no longer hold sway. And while much work has been done to drive forward reform, much work remains to be done, and actions taken by the government too often progressing at a snail's pace, sometimes blocking the reform, such as my legislation, that is so urgently needed. Consumers can't wait for reform and affordable insurance. They need it now, and especially given the fact that we see interest rates increasing in terms of the international markets, including government bonds. This will mean mean that insurance companies will make sizable profits in the year ahead as their investment portfolio starts to reap benefits for them. These matters and the other reforms that we talk about speak loudly, scream loudly to the fact that they need to stop gouging their customers, they need to reduce in premiums for motorists, for businesses, for community and others in society urgently. Thank you.